Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving right into. The cannabis industry has high hopes for President Trump. The White House may finally be rescheduling marijuana's drug classification. We're going to hear from the CEO of one of the top names in the business. That's straight ahead. Plus, some of the biggest moves for markets today weren't in stocks. We've got the takeaways of the trading day. And finally, a look at the changing workplace, especially for women. A new study shows a shift away from the lean-in movement. We'll take a closer look. Well, Tilray Brands among the cannabis names awaiting President Trump to reclassify marijuana as a Schedule III drug, which would lessen some federal restrictions on cannabis companies. Julie Hyman spoke with Tilray CEO Irwin Simon earlier on Market Catalyst for more on the road ahead for the company.
Number one. So if you come back and look at Tilray today, if you look at our Canadian operations and our international operations, which I just came back from Europe, we have a $150 million medical business today. So we're well entrenched into medical cannabis. And with the rescheduling, what it does for Tilray, it allows us to get into the U.S. business. It allows us to take what we've been doing both in Canada and Europe, and all our studies, our research, our clinical studies, our different strains, and come here. And with that, working either with the FDA, working with hospitals, working with our doctor groups, we can help a lot of patients in regards to what we can do with cannabis. So we're not going to be in the recreational cannabis business. We're not going to be selling cannabis through stores. What our business would be is taking everything that we've done in Europe and Canada and transporting it here. Also, the big thing, Julie, we have over 6 million square feet of grow of cannabis between Canada and Europe, and hopefully us taking the strains, the genetics that we use in Canada and Europe and bringing that to the US to help patients that need cannabis, whether it's for cancer patients, whether it's for epilepsy, whether it's for stress, for sleep. So it is a big thing for Tilray. The other big thing is this here. We don't have the legacy of taxes which other MSO has. We don't have any of that. So it doesn't legalize cannabis, but it will be big for patients that need cannabis for a lot of medical reasons.
And forgive my confusion, Irwin, it's because you don't grow the cannabis in the United States. It's in Canada and Europe, as you alluded to. So in order for you to sell recreational, that would require a lifting of the federal ban, correct? But so if it was the medical portion of your business, how significant a business opportunity is that if this change actually does happen?
So we estimate about $10 billion of medical cannabis could be sold in the U.S. So if, we had a 10% share, that's $1 billion. We get a 3% share of that, it's a $300 million business. So it gets us access to the U.S. market to sell cannabis and utilize the assets that we have with our grow and knowledge. And it's incredible. I just came back from Europe, and the demand right now is outstripping the supply because of patients wanting cannabis for so many different uses. So I think this would be great because I come back and look at it from the opportunities for medicine and what it will do with medical cannabis and what it will do to help patients. And I think it's just tremendous. And, we have a real good plan in place of what we would do if this happened and how we would ultimately do it.
Well, and I was going to ask you about that also, Irwin, because we've had some fits and starts, right, with this before, where reportedly we were getting close to the rescheduling, didn't quite happen. This seems like it's closer this time. So how quickly can you turn on that supply into that medical cannabis market in the U.S.?
Julie, as I said before, we've been doing this now for the last 6 or 7 years. Yeah. We can really turn it on pretty quickly. I've been having meetings with our teams, over the last few weeks. And again, taking what we've done in Europe, taking what we've done in Canada, and actually, transporting it here is something very easy. And today we ship, multiple tons of product to Europe at our Canadian facilities. We grow multiple, grams of cannabis in our Portugal facility. So we have the know-how to do it. We have the doctors, and we've done clinicals in Europe, and hopefully the FDA will accept some of those clinicals that we can use these products here.
I want to ask you about something else on the regulatory front, Irwin, because apparently in the bill that ended the government shutdown, there was a measure related to hemp and sort of products, including beverages, that include THC derived from hemp. And I don't know what your derivation process is for your beverages, but it's something that would propose banning that kind of production. And I just wonder what the effect, if any, that would have on the business.
So number one, in Canada today, we have close to a $50 million business that sells cannabis drinks, and they're only sold within cannabis stores. And we think that, the different provinces are working on things that will allow us to sell these, whether it's in beer stores or within liquor control businesses. So we see a big opportunity here. In the US, there was a loophole, and it was a loophole that you could sell cannabis drinks with anywhere from 5 to 10 to 15 milligrams of hemp THC products, and you could sell them in those states. There was a bill introduced as part of opening up the government. I don't think anybody wanted to stop that bill. And Senator O'Connell, I think probably got some pressure from, a lot of, whether it's the spirits companies to stop this. But I think what's happening today, and from everything I understand, there's bills being introduced. And what the good thing is here, whether it's the new cannabis bill that President Trump, will sign into effect in regards to rescheduling, whether it's the bill that will come into effect, which Senator Wyden is introducing in regards to hemp, I've always called for regulation. And that's what's important here. There's regulation that will come into place. And I think they'll regulate whether it's 5 milligrams of hemp in regards to drinks or 10 milligrams, because you got some rogue companies out there selling hemp today with 50 milligrams, which shouldn't be being sold. And it's the same thing with medical cannabis. You got, some illicit markets and markets out there selling cannabis as medical cannabis that does not have the different strains out there, does not have the genetics to be used for that. So what's important, what President Trump's doing, is bringing regulation into this and from a rescheduling. And it helps eliminate an illicit market. It helps put in place real regulations and really quality control, whether it's hemp drinks or it's medical cannabis. And I think that's important. One thing we can say about Canada, even though I don't like the excise tax there, the Canadian government really put in place some great process and policies in regards to both recreational and medical cannabis in Canada. And that's the same thing we're seeing in Europe.
Stick around, much more Asking for a Trend still to come. Stocks lower to start the last full week of trading. Investors awaiting an upcoming flurry of economic data. And Yahoo Finance's Jared Blikre joining me now with the trading day takeaways. Jared.
Thanks. Well, let's call it rotation and not retreat, because I'm going to show you the action, some of the majors here, and you're going to take a look at the Dow. That was down 41 points. That's just about break even right there. S&P 500 down a little bit more, 0.16%, 16 basis point, not a lot. And then the Nasdaq Composite, all right, that's not nothing, down 0.6%. Mainly tech though. We call it the tech-heavy Nasdaq for a reason. But here's what I'm looking at. The S&P 500 equal weighted index, that's where every stock gets one vote, and though it's not a huge gain, it's still positive, and the equal weight has been outperforming recently. Just take a look at the last month, up about 3%, not gangbusters, but for all the arguments and worries about concentration, that is kind of a counterpoint when you've got that reaching record highs recently. Here's the sector action today. Want to show you the year to date. Tech is still number one, communication services number two. That's where you have Meta and Alphabet. Then you got industrials. So kind of a cyclical growth heavy trade right there. But here's what happened this quarter. As I've been pointing out, healthcare, XLV, by far and away the best performing sector. That's up 12%. And then financials also outperforming just barely the S&P 500, but it's only up about 2%. But the point is that we have seen rotation take hold here, and we've seen it in the leadership too. This is my sentiment indicator full of ETFs, and right at the top there, the top two are actually biotech. Then we got Korean stocks, which is chip heavy. Then we have the Philly chip index. So that is actual chips. Then we got value, though, right next to chip stocks, value, solar, micro caps, regional banks, transportation, quantum, small oil, small stocks, that would be small caps. The list goes on. So my point is, although we've seen some things fall out of favor on a day-to-day basis, the bull market remains alive and well.
Some markets moving lower that I know were on your radar.
Yes. Let's check that out. We got small caps. So I was just talking about them. They might be in for a little bit of a rug pull. So notwithstanding everything I just said, I'm going to show you the price action of the Russell 2000. And I only highlight this here. And it's only been a couple days since we had a record high. But let me show you the year to date with some candlesticks. And here, well, I'm going to put the line chart. Those are hard to see. We just barely broke to record highs. And one thing small caps have done over the last 4 or 5 years is they have broken a new highs and then just immediately sunk back down. In fact, that's one of Bitcoin's favorite ploys as well. So I'm just wondering, we haven't crossed the Rubicon just yet, but we might be setting up for something a little bit farther down below 2,500. I think that suggests that we might be in for another little rug pull there. Here is a 5-year, and just to highlight what I've said before, here's the record high that we had in 2021. Then we exceeded it just ever so slightly, and then we came down, crash, and spoiled all those hopes that we were going to go straight up. And are we in for a repeat? Well, only history is going to tell.
We haven't talked in a while.
Yes.
Black gold, crude.
Yes, let's do that, because I've got a clever header for that, and then we can actually find the chart. Energy stocks doing better. Are they greater than crude oil? So here's the thesis. Crude oil today just settled at the lowest point in, I believe, 4 years. You'd have to go back to February of 2021. And there's a 5-year chart right there. And you can see here's that invasion of Ukraine by Russia back in 2022, 130 barrels, $130 per barrel intraday. We're looking at a fraction of that, 56.65 right now. But despite the fact that crude oil is down about 20% this year, I'm going to show you what's happened with energy. Energy, let's get the year to date on that. I think it's up about 5%. There you go. But as you can see this year, it's just been trading sideways. And in fact, over the last 5 years, most of this, it has been trading sideways. So if you take a look at the max chart, this goes back to the beginning of the century. We've been here before. Energy, this is XLE, large cap energy, first plumbed these heights in 2008 or so, and then we had it again in the mid-teens. And now what's different here, what I like about this setup, is that we are flagging. We didn't just hit a higher point and then immediately drop like these other 2 times. We are flagging right now. So I think if crude oil can get started next year, and there's a lot of support for commodities, especially with the weaker dollar, especially with the Fed lowering interest rates, energy might be one of the sleeper trades of 2026. That's my pick.
Finally, Monday, let's talk crypto.
Let's do that real quickly. Another disappointing weekend for crypto. This is going to be the year-to-date crypto. Bitcoin down 22%. I'm going to show you the last 2 months, and nothing new here. I've been saying that the shorts are in control. If you take this high here, this low here, we sold off from exactly the 50% mark. So the shorts are definitely in control. Still looking for 75,000. Haven't reached that just yet this year, but that's my washout point.
All right, thank you, buddy.
You bet.
Appreciate it. Stick around. Much more Ask for a Trend still to come. Women in the workplace are seemingly opting out of climbing the traditional career ladder. A recent report from McKinsey shows women are less interested in being promoted than men, highlighting a notable ambition gap. But our next guest reveals how women are, in fact, rewriting the rules of ambition. Chief CEO Alison Moore joining me now. Alison, it's great to see you. So let's start right there, Alison. So your own research suggests women are, in fact, redefining ambition. What do we mean by that? Walk us through it.
Yeah, so, the McKinsey report had a lot of great nuggets in it, and a lot of trends about what's happening in corporate environments. I think for us, it didn't tell the whole story. What we see in the McKinsey report was a definition of women's ambition as defined by A, being in a corporate environment, but then B, on this sole kind of act of getting promoted. Mm-hmm. And there was a gap, notably, between men and women. That's the gap. The gap is between men and women in raising their hand to be promoted. The gap is not that women are no longer ambitious. We took kind of fuel from our own study that we did with the Harris poll, in which 86% of senior women leaders that we queried said they are more ambitious than 5 years ago. They are seeing opportunity in change. They are seeing opportunity inside corporate, navigating things differently, but even outside corporate, like some of the new forms of business structures, and whether it's solopreneurs, whether it's a portfolio career, it's fractional jobs, these kind of roles that senior leaders can bring their tons and years of experience and bringing that to the playing field, that has driven optimism and in some ways a real excitement around the pieces that these women leaders want that define their ambition: flexibility, autonomy, control, agility in their role. And actually those are the things that top, when they define ambition, those are the elements, not job title anymore.
Did you have line of sight, Alison, in your research between whether there were differences in how they define ambition between different industries, verticals?
Yeah, so ours was a large survey that not only was external to Chief, but also within our Chief members as well. Chief is comprised of senior women leaders, but across multiple different verticals and multiple job types, all with a level of seniority. So the visibility that we had was broadly around 15, 18, 20 years plus of experience, and what they were seeing in terms of their excitement around what's next. And some of that excitement is optimism around defining their own career path in different ways. I think there's no question that there's been tumultuous, business environment, economic environment. And for leaders, that gets pretty volatile because the air is very thin at the top for all leaders, the number of seats less full. But there is this optimism that, even in that change, and there were 89% of the women that we queried said, I've made a massive change in the last few years, a big transition, a career move, sometimes out of corporate, sometimes to another corporate environment, often to start something new. 71% of those women made that decision by choice. Like that sees a level of autonomy and empowerment that is exciting, to see, and fraught with all the issues. When you come out of a corporate environment and you're doing something new and entrepreneurial, there are issues on both sides. There's nothing that's perfect. That's why it's work. But I think the challenges that you face as a sort of independent or a solo, or being able to start a new kind of career in a different industry or something, utilizing your skills, that curiosity and that flame and desire to do something different and manage your career, it's still quite alive.
We talked about opportunities, Alison,
Yeah.
for women in the workplace. How would you define what hurdles remain? What barriers? And are they different than if you were here and I was asking you that 5 years ago or 10 years ago?
I think there are some pretty, large barriers that still exist, and women work around them, through them, and against them. I think the first thing is the obvious piece of a woman's journey, and her work journey is infused often with caregiving responsibilities. And so as soon as you are in the child care and bearing and raising years, you get out of that. I have a 20-year-old daughter right now, you are very soon into the parent caring years, and somewhat bookended. And that is a part of your journey threaded no matter where you are. And it happens to all of us. That responsibility is disproportionately held by women, and women in business careers particularly. So that is definitely a factor when you think about navigating career and the just sort of external things that matter. Family matters. And so how do you navigate that, and what does that do for you in your career path as you're going through? So that's one thing. I think also it's the recognition that, sponsorship matters. And so it is harder. It's been tracked, I think it's in the study too, for women to find sponsors. And sponsorship in corporate environments means something. It means opportunities for promotion. So, often women become number two Sally, or not able to get the next rung of promotion, second in line for permanence. Sometimes it actually offers better job security with sponsorship. And then it's often something even as simple as those juicy assignments where you can really flex and show that you are ready to cross-train to some other thing. So I think, sponsorship is, people work on it. I've had the benefit of having sponsorship from men, from women. I think it matters in those environments. And so those are two large things that I think women have to navigate against. And to your question, we were talking earlier, senior women leaders, who are again kind of who we look after within the context of Chief, they're very aware that these are kind of systemic components of a woman's career journey, and they're thinking about the junior women coming up You know, how do we sort of set that table better for them? How do we network and create these sort of connections for these younger women to maybe break down some of those barriers? I think it's a constant, it's the work.
Alison, important research. Thanks for your time today. Appreciate it.
Thank you so much.
That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.